Technical analysis for market sell-off today, January 27th, 2021. What's up, everybody? This is Sang Win, and in this video, I want to continue the other video which I talk about the market is in profit-taking mode, or there's going to be a sell-off coming soon. As you know, it happens. There was a little sell-off, but a bounce the other day. But today it was official. It sell off and it closed near the low of the day. A lot of new positions probably got stop out. A lot of gains will probably disappear, and a lot of leading stocks were down pretty bad today. So let's take a look at the indexes to see how much are they down today. So the Dow Jones Index. Hold on a second. Let me bring up my nice pointer real quick. Okay, we are back. So the Dow Jones is down 633 points today, representing a 2%. The S&P index were down 97 points, 2.5%. The Nasdaq here were down 343, which represent a 2.5%. And the NDX index down 363, 2.69%. It's pretty bad if the Dow is down more than 500 points or more than 2%. As you can see, these index were down more than 2.5%. Okay, so let's go into the index individually and see what's going on. Okay, let me zoom in. So right here, the Dow ended up around this area right here. Bounced off a little, EMA right here. But today was a big red bar. Okay. 2 days ago, there was a signal because it sold off and then it bounced back up. And, the market was looking weak, meaning it cannot stand on its own 2 foot, or it's getting ready to run out of gas. As you know, the other video I updated before, I was talking about the market is up and down. It's like someone who couldn't make up his mind. It doesn't want to go down, doesn't want to move up, so it moves within this channel right here. But today, it officially broke down. Whenever it breaks down of a channel and it closes down, that is considered an official sell-off. Okay. Now, whether we'll continue selling off, we don't know. If we get some positive news from the government or something like that, hopefully it's gonna bounce and reverse. But if we get more bad news, COVID, bad numbers, job report, earnings, and stuff like that, or any political negative news, the market could be selling off more and making it worse. Hopefully we won't have that because as you know, I like to trade from the long position. Making money on the long side is easier than making money on the short side. I don't like to short stock that much because shorting is only temporary. As you know, 70% of the time the market is in an upswing, and about 30% of the time the market is in a downswing. Thus, the term short sell, that's why it's short-lived. You only make a short amount of money in a very short amount of time. Okay, so let's go to the S&P index. Look at this. I mean, look how big and tall this red candle is compared to the rest of the other candles. I mean, this is like huge, So basically, all we know is the market broke down today and it went below this low right here. As you can see, it closed near the low, but it broke under this low right here. Usually, when it breaks the previous low, meaning it tends to go down even lower. Hopefully, we don't have that situation. Okay, if we get some negative news, the market can continue to go down, and if it goes down under this low and break this low, things are gonna look pretty bad. I don't like that. I like to hold a lot of long position in my portfolio, and make money on the upside. Okay, let's go to the Nasdaq right here. On my platform, they use COMP for the Nasdaq. It makes my life a lot easier if just use like NASD or something. You know what I mean? This red candle is not as big as the other candle because it gapped down. It opened right here. That's why it left a big empty area right here. That's why this candle was not that big. Now, if it opens, near in this 13,600, there's going to be a big red candle. The reason is not that big because it gapped down. So when you're looking at a chart and you see a red candle that's not big, you gotta look at the gap to see where it was selling. Meaning that people want to get out, they just want to sell, 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 sell. That's why it gapped down like that. Okay, and as we are looking back here, there was hardly any gap except for this one right here. This gap right here is kind of small compared to this, and then this it bounced back up, but this it closed in the lower half of this candle. Like I said, hopefully we'll get some good news and everything bounce back up. Let's take a look at my favorite index, the NDX. As you know, the NDX represent the leading 100 non-financial company. Okay. Now this is actually a big, tall red candle right here. Number one, because it was a gap, right? And then it was selling. It tried to bounce a little with a tail right here, but sellers, they were just pounding on it. People were taking profit. Short seller was having a nice day today, and then the market went all the way down, bounced off this little EMA right here. But however, it closed in the lower half of the candle, usually signal that is very weak. Let's see. 1, 2, 3. So we have 3 red candles in a row. Okay. Normally we have 2, 2, 2, 2, 2. We have not had any 3 red candles in a row except for this area right here. So as I was saying, I use a group of signal that let me know when the market is getting ready to be in a profit taking mode or a sell-off, and that helps me manage my position. I either decide to exit the market or just hold very tiny small position when the market was selling off, and then when I see that the market is getting ready to pick up steam again, I re-enter the market. That helps me capitalize on a gain instead of holding the position and watch it decline. I normally exit at stop loss. Okay. I don't like to be what is called people who are bag holders. They keep on holding on to losing stock. That's not good. If you are on margin and you continue to buy into a losing position, eventually your account is going to be wiped. Okay, you can get away with it many times, but just one time when it doesn't do it, your account is going to be completely destroyed. I know lots of people like that. I got friends who belong in that group, and I tell them, hey, you cannot do something that mathematically is a ticking time bomb. Averaging down on margin, okay, averaging down on margin is a ticking time bomb, because eventually one time the stock is going to decline so much, all your principal will disappear, and your broker is going to liquidate your position. Okay, and worse, if the thing gap down so much, you might even owe the broker money. So averaging down on margin is very dangerous. I don't know why some people do it. Maybe it has worked for them in the past before, but like I said, if anyone wants to average down, make sure you are all cash. Okay. I don't average down because, like I said, I was part of the average down group. And even though back then I was averaging down on cash on my own money, the stock was declining so bad that, when I exited, I took a big loss instead of taking a small loss. Now I like to take small loss. I like my winners to be big and I like my loser to be small. That's the way I trade now. And I stick to that principle. So, anyway, going back to this right here, the market sell off today. And the group of signal that I use to foretell me the market sell off or in profit taking mode, it is now 6 for 6, meaning the last 6 times it showed up, the market pull back or sell down within 3 to 5 days, and normally they happen within 3 days. That is how accurate this group of signals are, and they are very valuable to me. They're very valuable to me now, even though when my account is not as big as I want to. But in 4 to 5 years, these group of signal are going to be extremely important to me because hopefully by then I'll have a lot of money in my account. And hey, as I was saying, hedge fund managers, institutionals, and big commercial hedgers, they also know about this group of signal. They don't show it, they don't share it because it's worth a lot of money to them. It's like a secret recipe for a chef, and chefs don't share their core recipe. It's like they don't just give that away. You know what I mean? But anyway, I want to make this video so to show you guys that whenever I make a video like this, that means I'm getting ready to either hedge, exit the market, or hold very small position so that I am not risking or I am not exposing a lot of my portfolio to risk. Because usually we don't know how low the market will go. Okay, hopefully we get some nice good news and everything started to bounce back up and we resume the uptrend. But it's always better to be safe than sorry. All right, until next time, until my next video, have a good one.